Welcome all to the burning issue of DHI Academy. Today we are going to focus on the prominent issue, that is GST, ICE, petrol and diesel. So before going to today's topic, we are launching a IFRS comprehensive optional course and test series which is starting on 15 July, and the dates have been extended. Even if you want to join, you can come and join to this particular optional course and test series. And this course will not only ensure your success in the Indian forestry examination as forestry as optional, but if you're aiming to give forestry as your optional in the next attempt in by appearing to Indian forest examination, you can consider this. So today we are going to discuss about GST, that is goods and service tax. Now GST is a comprehensive national taxation system in which union government sacrifice some of the taxation powers, state governments sacrifice some of the taxation powers, and then the goods and service tax was formed. So whenever we come to GST, the Union Finance Minister GST, when the GST was formed, there were certain commodities which were left behind and which were not included in the GST, in which petroleum and diesel are prominent things. Now recently, the Finance Minister Nirmala Sitharaman ji has said that they are planning to bring this particular petroleum and diesel under GST. As you all know, that GST is an indirect tax imposed on supply of goods and services. So GST has replaced many indirect taxes that were previously levied, such as service tax, value-added tax, gift tax, so on and so forth. So next, what is GST? GST is a destination-based tax which was formulated by 101 constitutional amendment holding the dream of one nation, one tax. Now, it is a single tax on supply on goods and services, and its product cycle or life cycle from manufacturing to the consumer to the end level, all the aspect of value addition is considered, hence is also called as value added tax, in which input credit is provided at each and every level. The final consumer pays only for the tax and not the entire supply chain, which was the case earlier. Earlier, what used to happen, the moment I need to purchase a shirt, I even pay the tax which was levied on cotton, I even paid tax which was levied on cloth, I even paid tax which was levied by the supplier or the garments tailor, whoever gave me this particular t-shirt. So next, under VAT, what happens is that this petrol and diesel are not yet included under GST. Instead, they are along with the natural gas and aviation turbine fuel. Now, this petroleum and diesel prices vary from state to state because they are taxed by individual states as such. So why it's not included in GST is because the regulation of petrol prices falls under the state control, and hence the states governments are not ready to give up their taxation powers, especially on petrol and diesel. So this is what the thing was that. And what is the benefits on if we bring GST under petrol? Obviously there will be uniform taxation across the nation. And the second most important thing is that tax eat up to 40 to 50% of the petrol price pay. Under GST, the maximum charge is around 40%. Beyond that, the GST slab doesn't exist. Now, even in this 40%, states will get their appropriate revenue, as this tax would be included under integrated GST. So, if petroleum and crude oil, high-speed diesel, and motor spirit, also known as natural gas and aviation turbine, even they are charged a maximum slab of 28%. So if GST is brought under petroleum, the maximum slab of 28% can be levied, not beyond that, which can see a drastic fall about 50% to the taxes of whatever are levied as of now. Let us take an example. If now the taxes which are levied are 50 rupees, now if it's brought under GST as a consideration, it will come back to 28%, which will be less than half of the current tax levied. So what if the petroleum brought under GST? What are the cons? Is that the aspect of agreement under GST council with respect to central state becomes a major issue. And second thing, the physical federalism plays a prominent role in this particular context. Even the potential increase in price of petroleum products also under GST could lead to an increase in prices of the products which are dependent on petroleum as such. So all of these aspects with the challenges, one of the most important thing and the most challenging thing is to bring state governments to the negotiation table so that the GST can be formulated. So whenever we come to examples of countries which are having their supply chains under GST is New Zealand, in which goods and services tax was introduced in 1994, in which 15% of slab has been levied on petroleum products as such. So that's all for today's news. I request you people to please like, share and subscribe the video, and never miss to press a bell icon so that you can never miss an update receiving from DHI Academy. Thank you all. Have a great day.